Good morning everybody from Vantage Markets and One-Click FX, and welcome to our new weekly report. Asian shares slid and the dollar rose on Monday as investors hunkered down for US inflation data that could jolt the outlook for interest rates globally, while accelerating or reversing the recent spike in bond yields. The near-term direction for assets could well be determined by US data on consumer prices and retail sales this week, with much resting on whether inflation continued to slow down in January. Median forecasts are for headline and core consumer prices to rise 0.5% for the month, with sales rebounding by 1.8%. Risks could be to the upside, given a reanalysis of seasonal factors released last week saw upward revisions to CPI in December and November. There were also changes to the weighings for shelter costs and used car prices, which might bias the CPI higher. As a consequence, markets have already sharply raised the profile for future tightening by the Federal Reserve, with rates now seen peaking up around 5.15% and cuts coming later and slower. There's also a full slate of Fed officials speaking this week to provide a timely reaction to the data. That shift helped stabilize the dollar, especially against the euro, which slipped 1.1% last week and extended the retreat on Monday. The dollar also got a leg up on the yen on reports Japan's government was likely to appoint academic Kazuo Ueda as the next governor for the Bank of Japan. The surprise news sparked speculation about an early end to the BOJ's super easy policies, though Ueda himself later said it was appropriate to maintain the current stance. The rise in yields and the dollar has been a burden for gold prices, which was stuck at $1,859 an ounce, compared to an early February peak of $1,959. Oil prices ran into fresh selling, having jumped on Friday when Russia said it planned to cut its daily output by 5% in March, after the West imposed price caps on Russian oil and oil products. Moving on to the charts, let's have a look at the weekly reference levels for the euro-dollar. The resistance is at 107.29. The support is at 106.22. Should the market break the support at 106.22 after the inflation data, we could see a further slip below 105, roughly between the minus 1.5% mark and the minus 2%, exactly at 104.62. On the other hand, should the market change the polarity of the resistance at 107.29, we could see a pickup on the euro towards the 2% mark at 108.93. Moving on to dollar-yen, we see the pair up for the month 1.84%. The pair is up for the day 0.81%, and it just reacted from the 1% mark at 132.72, with a bullish analysis of the RSI. Should the market break the resistance, we could see a further appreciation of the dollar against the yen towards the 2% mark at 134 and the 2.5% mark at 134.69. Signs of weakness would come with a quick return below 131. Gold is still showing weakness, down 3.52% for the month and 0.28% for the day. The market is testing the weekly support at 1856 with a bearish analysis of the RSI. Should the market break and change the polarity of the weekly support, we could see another leg down towards the 1800s. Purchases on strength would be allowed just above the resistance at 1874. US crude oil just rebounded from the weekly support at 78.51 and it's trying to resume the climb. Purchases on strength could be allowed with a breakout and change of polarity of the weekly resistance at 80.11, the 0.5% mark. The analysis of the RSI is still bullish, so With a change of polarity of the resistance, we could see a further appreciation of crude oil towards the previous resistance around 82.10, the 3% weekly percent pivot. In closing, the Nasdaq up 2.6% for the month and 0.69% for the day is just moving above the weekly resistance at 12,360. If after the data the market should come back below the previous weekly close and break the support at 12,237 with a bearish analysis of the RSI, we could see another leg down for a retest of the recent swing low around 11,800 for a complete reversal of the previous bullish impulse. With that said, that's all for the weekly report. Thank you for your attention and good trading from Vantage Markets and OneClickFX.